India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's the middle of the week, Wednesday morning. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, good morning. I guess global markets taking a bit of a break, at least Wall Street, that is, but plenty of cues here, plenty to go over.
Lots to go over. And Nigel?
Well, indeed, and result season is picking up steam. So we'll have a few earnings coming in today as well from the Nifty pack itself.
Absolutely. And although the handover from overnight has been a little softish, and I think we kind of deal with that at least at 9:15, and then we'll see what happens. Yesterday was a blah kind of a day, neither really up or down, and very difficult to make any sense of it, except maybe 2-3 groups of stocks which did well. So that's the backdrop. I mean, neither here nor there. But last night, overnight, from the US equity markets, the signal is a little bit of a risk off. Not very much. NASDAQ was down about just under 1%. And that's the change that we'll have to deal with. CBOE Wix, it held near intraday highs, about 21. There was a jump and then it held near intraday highs. The sell-off in the US equity market was led by semiconductors. I mean, they're responsible for the bulk of the rise, the big rally over the last couple of years, AI, semiconductors, and last night they took indices a little lower. Reports say US officials are planning or thinking about and may implement capping sales of advanced AI chips to certain countries, right? Read China. And this is, of course, one reason why stocks like NVIDIA, etc., were down between 4-5%. There were numbers from one semiconductor name as well, which disappointed, and that one was down even more. But NVIDIA, of course, is the big one, and that had influence on the entire bunch. Data was not very supportive. Empire manufacturing numbers came in much weaker than expectations. Yields lost about 7 basis points, so just about 4% now. Dollar index was flat, not very much by way of change. Oil prices, but I think the 4% drop that we're looking at this morning was well advertised even when we were trading, so it's not new. And the market kind of traded through that 4% drop, through the last few hours of trade, but just sort of reflecting where we finally left off. Now, there's just one news report out of Wall Street Journal, which I want to put out, which essentially says that this is a sourced piece, but without naming who the information has been gotten from. The piece says that recent measures out of China have been for de-risking rather than outright stimulus. So, I mean, China at the margin has been important, is important. We can talk more about this as we go along. But this perhaps will have a bit of a sobering impact once again with regards to this entire China revitalization, China trade. So where do we begin? I think we'll begin with a cut as the GIFT Nifty is indicating as well. The more constructive view is that maybe the Nifty is consolidating around, trying to form a bit of a base here. Many technical analysts are of the view that we're still in a pullback from the highs, and the up moves are not to be trusted, at least in the near term. But the positive view is that maybe we are consolidating, forming a bit of a base, and we need to take out the previous high, which is 25,234, before we talk about higher levels. And that's the first sort of resistance which the market will face. Above this, then you're looking at the 50 and 61.8% retracement. Same numbers that we've put out over the last 2-3 days now. By the way, the Nifty yesterday failed to take out the 40-day exponential moving average. And we kind of ended about 0.25% lower. Support for the Nifty comes in at 24,920, which is the recent swing low that we had. Nifty Bank, it ended slightly above the 40-day exponential moving average yesterday. And here we're looking at the 50 and the 61.8% retracement levels. So that's 52,330 to begin with. That's the first level. And on the way down, the low of 51,005 will need to be protected if some of this needs to work out. So we'll see. I mean, I think we begin with a slightly weaker open. Earnings, remember, for the state, but it's nothing new. It's well advertised that Q2 is weaker and it's begun on a weaker note. So, we'll have to sort of look through some of those things and, of course, individual numbers as they come through. Just leaving you with the GIFT Nifty as a change and just to look at what we are seeing. So 80-point lowers the implied open as far as markets are concerned. So reflecting almost fully the cut that we had last time. Surabhi.
Oh, absolutely. Red is a bit rare on Wall Street these days, but that's what we got yesterday. So the market taking a bit of a breather. That also, I mean, after intraday touching record levels once again. Asia this morning is taking over from that weak Wall Street end because a lot of the markets in the region are down quite a bit. Up in the Japan market, if you're looking at the Nikkei, that's dropping about 2% right now. Hong Kong is lower. Mainland Shanghai is lower. Hong Kong, remember, slumped about 3.5% yesterday. And on top of that, we're seeing some more selling come through. So the setup is not very, very positive. However, we have some decent cues to look out for. One, of course, is the fall in oil prices that Prashant alluded to. And the second big thing is that this FPI selling business, sell India, buy China, whatever that trade was that was going on, that is cooling off in a substantial way. After many, many, many days, the FII sell figure has come down to sub 2,000 crores. The number yesterday was 1,748 to be precise, and domestic institutions were lapping it up. They almost entirely bought whatever the FII sold at a net level with a net purchase of 1,650 odd crores. So the fund flow position for the market is stabilizing. That's the good news. We're going to get into election season full throttle, and politics and whatever sort of state-specific action we see, that's going to be dominating headlines. The dates are out, so just to put it on record, Maharashtra, it's a single-phase election on the 20th of November. Jharkhand is in 2 phases. And then counting of votes and the result announcements are on the 23rd. So 23rd becomes an important date with respect to those 2 key states. Lots of company-specific news, and we'll get you, more details on this later. But watch out for HDFC Life. That stock was the worst performer on the Nifty. Now, the management did try and come in on the con call and assuage some of those concerns on the margin. They're also talking about overall guidance on growth being better than what was previously anticipated. So let's see if there's any recovery in that stock. Cochin Shipyard, there's an OFS happening, so watch out for the PSU pack and Cochin in specific. And finally, Hyundai, very interesting. Day one has been fairly subdued for this mega IPO. The total subscription as of yesterday was just 0.2%, with retail buying in a lot more than institutions and the HNI fraternity. So let's see, day 2, day 3, it should pick up, but Hyundai is in focus as well. Today is a busy day on the results calendar. Bajaj Auto, which was also very subdued ahead of earnings yesterday. That's the big one to watch out for. There's a couple of mid-cap IT names like L&T Tech, Emphasis, Crystal as well. So fair amount of earnings action as well. And I'd like to end with something on Telecom, which is not necessarily stock moving immediately, but it seems to be fairly big and it's brewing, which is the battle for satellite telecommunication and the battle between large global names like Starlink and Indian incumbents like Airtel, like Jio. And this was the most interesting takeaway from the India Mobile conference that took place yesterday, where the Indian companies were batting for a level playing field, saying if a global major has to come in, and if you're looking at satellite rights, then they should have to pay for spectrum in the same auction way that the Indian companies pay for it. But the minister then finally spoke on the matter, and the minister, that is Mr. Sindhia, went on to say that satellite spectrum across the world is allocated administratively. It is not auctioned out. So India perhaps has to follow the global precedent. But there will be a cost of this allocation. It will not be just sort of handed out for free, and that cost will be decided by TRA. It's a hot space. It's a very hot debate. We had Mr. Musk tweeting on this as well. He's watching the India action very carefully and wanting to come in. So let's see, this sort of in a big picture way will keep the telecom sector in focus as well. Nigel.
Well, on the flows front, just want to make 2 quick points there. Now the FI and the DI number, they're almost, nullifying each other. And the second factor is if you compare it with October 3rd, at that point of time, we had a net sell number of 16,000 crores. Yeah. That's come down to around 1,700 crores. 1,600 now. That's down by close to around 90%. So on the flows front, we're in far better shape on October 15th in comparison to October 3rd. But we've got a tailwind for us, right? And that's a big global tailwind and macro tailwind that we're talking about, because crude oil prices are well behaved yet again. No escalation, mostly de-escalation is what we're seeing on the geopolitical issues, and that's a macro tailwind for us. The other one is that the Nifty Bank, the buy on dip has restarted out there. Even yesterday's trading session, that did well. Plays out the weekly expiry, so that's going to be the key mover for today's trade. What about positioning? Well, the FIs, they continue to remain net short. They're adding a few net short positions as well, moving to around 1.6 lakh contracts. While the client side, they're net long with close to around 2 lakh contracts on the long side. In percentage terms, the FI short positions are at around 35%. options data comes up for you on the screen, and you saw the PCR came down because the call writing came back yesterday, and the bears seem to be getting confident. 25,000 call, 25,100, 25,200 call. All of them did see a fair bit of addition, telling you that the bears are getting a little bit too confident. So if the bulls can, get to those levels, then maybe we could see a bit of a short covering bounce, which brings us to the levels that we're looking at. So I'm looking at the options data, and you're getting the resistance zone, which comes in at around 25,250, around 25,300. Recent low becomes a reference point at around 24,700. So that's the broad range that we're looking at. But the Nifty Bank, that's the one that's got into buy on dips mode, and that's going to be the mover. So it gets support at around 51,500. We almost visited that yesterday, but it'll decisively break out once it trades continuously above that 52,100 and then heads towards the 20 DMA. So the Nifty Bank, that's the one that you could be more optimistic on in comparison to the Nifty, just going by the recent price action. Stocks that I'm looking at, HDFC Life. The big loser yesterday, the question is, will the street buy into the management commentary? Because they are sounding quite optimistic, and they're saying that the margins in the last quarter were hit by higher ULIP share, and there were price increases that were affected that didn't reflect in the past quarter, but they got a little bit delayed. So will the street buy into that commentary? That's going to be very important because there were shots that got into the system. Let's see whether or not we see a pop on that one. The other one that we're looking at is Interglobe Aviation. A lot of tailwinds out there. You had United Airlines overnight that reported a set of numbers. They have announced a $1.5 billion buyback program. Besides that, crude oil prices are lower, which will keep ATF prices subdued. They're holding on to their market share, and we're getting into a busy season. So I'll keep an eye out on both these two stocks, HDFC Life and Interglobe Aviation.
All right. Well, we'll keep an eye out on those as well. Nigel, thank you very much for that. Let's get you our first view on the program. Lyn Alden is founder at Lyn Alden Investment Strategy. Lyn, good to have you back on the program. Thank you very much for your time. So last night, the US market seeing a bit of a pullback, WIX jumping to about 21. What did you make of it? Do you think on the S&P we see, how are things looking? I mean, is it looking a little tricky, or you think we are headed to 6,000 as many sell-side brokers have raised their targets on the S&P? What's your sense?
I continue to have an upward bias toward the S&P 500. I think it's natural that there's some pullbacks here. The market's done very well recently. I do think that there are global markets that are more interesting right now than the S&P 500. It's still generally a crowded market compared to other markets that are out there. But there are a number of high-quality equities throughout the U.S. market that are still reasonably valued, and I think they still plenty of room to grind up over time, even if maybe some of the most expensive names struggle a bit.
Lyn, hi, great to have you on the show. So, net, what is your stance on U.S. equities? The market's had a fantastic run, and the macro numbers have been looking good, while the rate cut expectations are obviously still intact. So, are you expecting equities to continue the strong momentum that we've seen so far this year?
I'm looking to see if there's a little bit of a rotation. I think right now there's a lot of capital stuffed into some of the more defensive equities. There are companies like Costco times earnings because investors are very piled into these defensive names. Whereas some of the cyclicals, some of the financials, and other areas of the market that are having more volatility in their underlying fundamentals are relatively unloved by the market. They're relatively inexpensive. And I do think that we could see a rotation where maybe the index doesn't perform very good, but that some of that concentration widens a little bit. There's a number of indicators showing that bank lending is less tight than it was a year or two ago. There's a number of liquidity indicators that are looking pretty good. And so I think this next year could surprise to the upside in terms of some of those parts of the market that are not particularly valued by investors at the current time.
Hi, Lyn. Good morning and good to see you in. This is Nigel on this side. What are you making of the dollar index bounce back? I recall in one of your interviews when you joined us, you had mentioned that it looks like the dollar index is trying to form some kind of bottom and look for a bit of a bounce. So what's the trajectory on the dollar index? And with that sort of a backdrop, what's your view on emerging markets? I think you were getting a little bit positive on emerging markets.
Yes, my overall concern over the past month was that gold looked a little bit overbought and the dollar looked a little bit oversold. And so to set expectations, my view was I wouldn't be surprised to see a consolidation. And that's what we've seen so far. I think basically the global markets got, a little bit too enamored with gold in the near term and a little bit too bearish on the dollar in the near term, and that some of this retracement is natural. I still think in the coming years, gold is headed higher. I think it's a pretty structural bull market. And I am still favorable toward a number of emerging markets, but these things don't really move in a straight line. And sometimes overcrowded positions have to get shaken out. So I think that's a normal and healthy part of the market. And I think that emerging markets have a really big wall of worry to climb. They have to really prove themselves to global investors that have not really had good performance with those for quite a while, at least, some markets more than others. But if you look at the global aggregates for emerging markets, that's been a troubled area. And so I think it's going to take time for them to prove themselves to investors and attract that marginal capital from around the world.
Okay. All right, Lyn, we will leave it on that note for this morning. Thanks so much for joining in with some perspective. We look forward to our next conversation. Let's quickly move on. We have lots of stocks on the radar, as we pointed out. So here are the main ones to track today. We will get to our special top 10 segment in just a bit. Today, we're looking at names like HDFC Life, Reliance Industries, Bharti Airtel, Vodafone, Idea, Cochin Shipyard, Rallis India, and PNC Infra, also Segal. These are on probably on the green side of the board. Then you have names like Vedanta and KEI Industries, some red there. KEI has come out with numbers as well. We'll tell you more about it in our top 10 segment in just a bit.
Okay, well, let's quickly tell you what's lined up here on the program as well. So we have at 8:30, Anil Kumar Gupta of KEI Industries putting the focus on the second quarter earnings. 8:40, Amnish Agarwal of Prabhudas Lilladher with some fundamental stock talk. Niket Shah comes on at 9:20 as a market master. 9:30 in the morning, we'll have the HDFC Life management talking about their earnings and the outlook going forward. Dinesh Thakkar of Angel One will be talking about their second quarter earnings. Stock was a big winner yesterday. We'll have Kumar Rakesh of BNP Paribas joining us at 9:50 to talk about expectation from the auto sector. And then, of course, it's the economy with Lata, who will be joined by Nidhu Saxena of Bank of Maharashtra for their second quarter performance.
Well, the cues are a little muted across Asia. We've been telling you that, and the implied open is telling us it will probably start a couple of points down here, 70 odd points down. That's the indication because most markets are reeling under pressure. Individual stocks in focus. Now it is time for the CNBC-TV18 top 10 list of the morning, and we have our entire team standing by to bring you that distilled list of stocks to focus on. Guys, morning to all of you. Vamakshi, let's start again with HDFC Life, right? Because the stock was under so much pressure yesterday. The market didn't like the fact that the margin is falling. And there was an analyst call. So what came out of it?
Well, absolutely, Surbi. Very good morning to you. HDFC Life, held a conference call, like you rightly pointed out, post-market hours. They say that they've gone ahead and revised their EPE growth outlook to 18 to 20% as compared to 15% earlier. However, they are sticking to their VNB growth guidance of 17 to 18% for FY25. Additionally, on margins, the company clarified that margins will not be in a free fall, but will need some flexibility out there. So those were some takeaways that came from the con call, but there are certain brokerage notes that have come through as well. Morgan Stanley as well as CLSA appear to be positive on the counter with an overweight and outperform call respectively. Nomura, on the other hand, has downgraded its rating on this counter to neutral, citing lack of near-term triggers. But overall, positive commentary coming from the management, going with the green for this counter.
Thanks a lot for that, Vamakshi. In fact, we'll connect with the HDFC Life management at 9:30 a.m. So stay tuned to CNBC TV18 for that conversation. Let's hop across to Hormuz. He's here to tell us about Telecom Minister's backing tariff hikes. Morning, Hormuz.
Morning, Nigel. Strong words coming in from Jyotiraditya Scindia on the tariff hikes, and he mentioned that India's tariffs are now one of the lowest in the world, with one call almost costing just 3 paisa. And he also mentioned that the telecom sector has invested nearly 4.5 lakh crore rupees so far, and that return on investment is very critical for all of these companies, without which the sector will not be able to make that transition from 4G to 5G and then even to 6G going forward. Now, remember that the industry has very recently, as early as July, has hiked tariffs by around 15 to 20% of all three companies, be it Jio, Bharti and Vodafone Idea, and the tariff hikes has been only once in the 2 to 2.5 years. Now, analysts believe that Vodafone Idea will require a lot more tariff hikes to meet its debt repayment obligations, and HSBC now, as a result, has upgraded Bharti Airtel to a buy and raised its price target to 1,950 rupees from 1,335. So overall, the telecom minister is batting for more tariff hikes. Expect these stocks to open in the green as well.
Thanks a lot for that, Hormuz. Well, I'm focusing on Vedanta. You know, Vedanta Resources, that's the parent of the listed company Vedanta Limited. They have gone ahead and signed an agreement worth around $125 million. Vedanta Resources, well, they are the designated borrower, while you have Standard Chartered Bank Singapore, which is the arranger, the agent, or the or the lender. Now, the key intention is to address Vedanta Resources' funding requirements. For Vedanta Limited, which is the listed entity, they're not a party to this particular facility agreement between the two parties, that's Standard Chartered as well as Vedanta Resources. But encumbrances have been created over the shares of Vedanta Limited. Now, this event more or less is neutral, but it could see a bit of a downtick on the stock because commodity prices are a little bit weakish overnight. And since now Vedanta Resources has secured themselves of this funding, will there be any dividend at all? The meeting was postponed a couple of times, so we'll have to keep an eye out on that. So going with a tinge of red on the stock.
And the fact that the listed entities' shares have been used as, perhaps some sort of collateral against this loan that they're taking.
For many, many quarters and years, it's always been pledged. That's the only thing. For any other company, we would have said, it's a bit of a negative. But otherwise, we are used to most of the shares getting pledged. Yeah, but I'll be waiting by to see, because they said a dividend was postponed a couple of times. Is there a dividend meeting in the offing? Is something that I'll look forward to, since now the parent has secured this $125 million.
Okay, so Vedanta will remain in focus. Let's move on and talk about some other stocks and news. Vivek is joining in with his list. Vivek, good morning.
Well, good morning. Quite a few stocks on the focus on the back of results, as well as auto announcements that come in post-market hours. First on our list is Rallis. Good set of numbers from the agrochem company this time around. Revenues higher by almost 11%, coming close to the 930 crore mark. EBITDA higher quite strongly, 24% higher on a year-on-year basis, leading to a margin expansion of a little over 150 basis points on a year-on-year basis. Profitability coming in at 98 crore versus 82 crore on a year-on-year basis. Now, talking about the domestic volumes, domestic crop care volumes up almost 17%, however, marginally offset by the 11% drop as far as pricing was concerned. Talking about the export volumes, it was flat, but the price decline actually led to a 9% decline as far as the export revenues were concerned. Now, coming to PNC Infra, two important order wins coming in over there. Total orders worth 4,630 crore. This is coming from the Maharashtra State Road Development Corporation. This is a timely order win, given the fact that now the election code of conduct comes into place and there will not be any fresh bidding that will happen as far as ordering is concerned in the state. Now, remember, the order inflows achieved by the company right now translate to close to 50% of the lower end of the stated guidance for FY25. And lastly, Seagull is the other company in focus. Again, an order win over here in terms of the company emerging as the L1 bidder, or the lowest bidder. This is for a 4-lane construction project in Ranchi. The project cost at 207 crore, and the construction period timeline is 18 months from the from the time of signing this particular contract. So all of these stocks going with the green. Strong results from Rallis and two strong important order wins for the infra companies.
Okay, all right, Vivek, thank you very much for that. Well, let's talk about KEI Industries and Cochin Shipyard as well. Upasana is here with numbers on these companies. Upasana, morning.
Good morning. First up, let me start with KEI Industries. The company reported mixed set of numbers. The revenue met the street estimate, but PAT and EBITDA margins were below the street estimates. Revenue saw an uptick of 17% on a one-year basis, led by cables and wires segment, and EBITDA margins were under pressure, down about 70 basis points at 9.7%. And companies, all three segments saw a margin decline on a year-on-year basis. PAT stood at 155 crores with an uptick of 11%, and board has also approved raising of funds via QIP worth rupees 2,000 crores. Company's order book stands healthy as of 30th September 2024 at 3,850 crore. Next up is Cochin Shipyard. Government to divest 5% stake in the company via OFS at 1,540 per share. The OFS includes base offer of 2.5% with an additional 2.5% available as a green shoe option. 25,000 equity shares will also be offered to the employees of the company. The total OFS size is about 2,000 crores. The sale of non-retail will be on 16th and 17th of October, and retail and employees will be on 17th of October. Mind you, as of 30th September, government holds 72.86% stake in the company, hence even this stock will be in focus today.
All right, Upasana, got it. Thanks very much. We'll keep all of those names on our radar as well. So let's quickly recap the list for the morning. Stocks that have positive news flow around them include HDFC Life, Reliance Industries, Bharti Airtel, Vodafone Idea, Cochin Shipyard, Rallis India, PNC Infra and Segal India. The ones that have some negative news inputs around them are Vedanta and KEI Industries. All right, now let's head across to Manisha Gupta for a roundup of all the commodity market action. Manisha, morning. Yesterday, this dramatic fall, 5% fall in oil prices, that was making big headlines. What's the latest?
Absolutely. Well, absolutely, Sylvie. If you look at the Monday, we saw 2% of decline on crude. Yesterday, it was a 5% decline, but the markets closed with 4% of a cut. So if you look at this week until now, the last two trading sessions, we have $5 down in case of crude oil prices there. Well, one, it has been weak global demand outlook. Second, OPEC and IEA both have cut the forecast for global demand for this year and for 2025 as well. There are huge capacities with OPEC, and more importantly, the war premium that seemed to be building up in case of crude oil prices also seems to be coming down, as Israel for the last couple of days has continued to reiterate that they will not strike Iran nuclear or oil facilities. So that tells you that oil disruption in sense of supplies is perhaps not happening, bringing the prices down. What also has been sliding down has been the metal prices. This area is bothered with the lack of details on China's stimulus. The Chinese exports have continued to decline as well. So overnight has been a third straight day that you have seen a decline come in for copper, nickel, aluminum. For this week itself, we are down by 1.5% to 2% for most of these metal prices.
Okay, well, Manisha, thank you very much for that. So that's commodities in focus, and we'll go back to Manisha for more later. We'll take a break. We'll have Anil Gupta of KEI Industries join in, the first management on the program to decode second quarter earnings. That's coming up. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. As promised, let's get straight to the first management on the show. KEI, they reported a mixed set of numbers in the second quarter. The revenue met the street expectations, but margins came in a little bit lower. To discuss more on this, the outlook going ahead, we're joined by Mr. Anil Gupta, the CMD at KEI Industries. Hi, Mr. Gupta. Good morning, and thanks a lot for speaking to us here on CNBC-TV18. Well, top line was more or less in line. There was some softness in smaller segments like the EHV revenues. But the problem was that margins came in at the lowest we've seen, I think, in multiple quarters. A brokerage note mentions a 10-quarter low. Could you tell us if there was any kind of one-off impact in the past quarter? And do you stick to that margin guidance of around 10.5% to 11% for FY25?
Yeah, good morning, Nigel.
Morning.
First of all, the EBITDA margin in this quarter is around 10.42%. And if you see first H1, 6 months, it is 10.88%, which is in line with the guidance. This quarter, a small 0.5% margin is impacted due to extraordinary fluctuation in the copper prices, and which led to little bit fluctuations in the margins due to inventories. Inventories in the June were very at high copper prices, and in July and August, because of the LME fall, we had to adjust the prices. So, but if you see overall, full year or first half, we are, in line with our guidance. And the H1 is around 10.88%.
All right, Mr. Gupta, the reason for the difference in the margin, absolute margin numbers, because we are not including the other income, and I presume that you're including the other income. Be that as it may, copper prices were higher, so that impacted margins. But you're expecting things to recover. So in comparison to your calculation of margins in the first half of the year, what should the margin improvement be in the second half of the year? If you could help us out with that number. And do you stick to your revenue growth of 15 to around 17%, which you have done in the first half?
Yeah, I stick to our revenue guidance of growth of 15 to 17% and EBITDA in the range of 10.5 to 11% in the whole year.
Yeah. Mr. Gupta, hi, good morning. Just a quick word. We're in election season once again, and the model code of conduct, etc., will kick in. Any implication because of that? I mean, of course, Maharashtra, but it's a large state, Jharkhand as well. Any impact in the quarter?
No, I don't think there will be any impact on the quarter because the orders are ongoing and we are not taking direct a lot of direct orders from the government utilities. So the contracts which are going on with the EPC contractors or the orders which are already placed, and we are very well booked. So I don't think there will be any impact of these elections on our revenues in the third quarter.
Just to finish off one point on copper prices. So are you, earlier you told us May, June, July, etc. You were increasing prices, right? I mean, then prices started to come off a little bit. Where are we now because of the input copper prices? What's happening in the marketplace?
Yeah, we have increased the prices in line with the copper prices prevailing. And I think, if I am right, it is up by 10% compared to what it was in April or May because of the LME increase.
Hi, sir. Morning. So I just want to talk about the QIP as well. You're raising about 2,000 crores, right, with this equity capital fundraise round that you're doing. Just tell us, I mean, how this will tie in with your capex plans, because you've already shared with us you have pretty aggressive plans. I think almost 1,000 crores being put to work this year. That's a street estimate, and then you have another 500 odd crores for next year. So what is the total capex requirement for the balance of this year and next year, and how will you be using this money, and then where does that take the debt equity position to? This is all equity capital. Would you be looking at any further debt for the rest of your capex?
Sonia, our total capex in our Sanand plant is likely to be 1,800 to 1,900 crore rupees. In this financial year, we have already completed 2 brownfield projects at Pathredi and Chinchpada in Silvassa, and have spent more than 300 crore rupees in the first half on the capex. In the next 6 months, we are likely to spend around 600 to 700 crore rupees at Sanand because no other capex is going on at the moment. And in the next financial year, balance of 800 to 900 crore will be spent. So this QIP, the exact figures are yet to be decided. We have taken an approval of 2,000 crore from the board. But, overall, we are going to spend 18 to 1,900 crore rupees at Sanand in this year and next financial year. So this QIP is basically meant for, funding the capex requirement.
Okay, all right. So your debt in the books is what, 450 crores? Net debt?
Yeah, it is. Yes, 450 crore. But it includes majorly channel finance. So the actual debt, is very less.
All right, Mr. Gupta, I just want you to clear the air, because yesterday as well, many sell-side analysts were wondering why is Mr. Gupta going to be raising money via the QIP route? Is there some inorganic growth on your mind, or is it purely for the capex requirement? Is there an acquisition you're looking at?
No, we are not looking at any acquisition, and it is purely for the capex requirements.
All right. And the timing of this, sir, will it be somewhere in the quarter 3?
Yeah, it is likely to be in the quarter 3.
So just to understand, I mean, I'm looking at the shareholding. Promoter group currently has about 37% shareholding in the company, right? Now you're issuing further equity capital. At what level of shareholding are you comfortable owning? Will you be sort of Are you okay with some dilution? Would you want to eventually buy back more from the market? Well, what's the promoter intent in terms of how much of the company you want to own?
See, with this QIP, my dilution, promoters group dilution may be around 2 to 3%. So we are quite comfortable with owning 35%, and we will look at buying back some of our shareholding from the market, especially the.
Over what period, and what is the level of shareholding that you want to maintain?
We want to maintain anywhere between 35 to 36%, and I think we will be able to maintain that.
Okay, all right. I'll just try my luck with this one last question, maybe slightly tangential, Mr. Gupta, but is it a big diversification for a sort of cable and wire company like yourself to go into optic fiber? Or does it take a lot? I don't know, that's why I'm asking. So, for example, some of your competitors who also have optic fiber businesses are expected to get large orders from the BharatNet program. Just wanted to check with you about that.
Yes, of course, it is absolutely a different product, although the processes are similar, but the plant and machinery is absolutely different. And we have seen that these products have very high fluctuations in demand pattern from time to time. The demand pattern is not steady because when the BharatNet or some BSNL tenders comes, there is a large demand. And sometimes they don't come out with any tender for around 2 years or 3 years. So the steady revenues, if you check other companies also, may not be there in this product.
Okay, very lumpy, basically. Got that. So thank you very much, Mr. Gupta. Appreciate you joining in, and we'll speak again soon. Thank you very much for your time here on CNBC TV18. Amnish Agarwal is, I think, with us now, Head of Research at Prabhudas Lilladher. Amnish, good to have you with us here. Thank you for your time. I just wanted a quick word on, to begin this, with oil marketing companies. I think HP was up 4% yesterday. BP, by the close of it, was up 2%. Oil is down 4%. Elections, model code of conduct. So I guess no price cuts at the pump. It's a bit of a slightly positive environment. Any thoughts?
Yeah, hi Prashant, thanks. You see, as you rightly said, oil prices have crashed. And secondly, with the election code of conduct, there are not likely to be any price cuts. So for the next, I think at least couple of months, I think their margins are going to be good, and that will result in some sort of, you can say, short-term trade in these stocks. Okay,
a short-term trade perhaps possible in oil marketing stocks. Related to the Maharashtra elections, Amnish, hi, morning, Surbhi here. A lot of the infra players are announcing order wins, right, just before the code of conduct kicks in. Whether it's PNC Infra, GR Infra, Ashoka Buildcon, all of them have announced orders from one or the other Maharashtra body. What do you like in this space? I don't know if these companies are under your coverage. PNC has announced a massive order wins last couple of days.
Yeah, hi. So, you see, these order wins, usually they precede any election announcements or around the election, and it practically happens in, you can say, every state. Now, if you look at, say, all the companies, say, for example, all these, you can say, whether it is your PNC, KNR, so all these have been traditionally you can say, the road players, which have done very well. But if you look at, say, over the medium term, I think the players which are focused on segments like, say, metro, then your PSP, nuclear, I think some of these segments or the urban infra, they are likely to come up and they are likely to do well over the years. So we don't have any formal coverage on, you can say, any of these construction stocks except L&T. But my sense is that the niche players which are operating in some of these emerging segments where the focus of the government is going to be on the infra building, on the, you can say, renewable energies, on pump storage, as well as some of the factors like, for example, your ports are there, railways are there. So I think these are some of the stocks and segments which will continue to do well. But having said that, these orders will actually start reflecting in actual implementations maybe 1.5 years down the line.
You want to name a company, Amnish, apart from L&T, tier 2, tier 3 infra players, anything else that's under your coverage and that you have a buy on?
You see, we don't have, you can say, stocks under coverage, but you see, this entire space was not doing well. Say, for example, on the metro side, ITD is doing well. Then on, you can say, hydro and you can say, hydro, your BRO initiative, then the companies like, for example, Patel has been getting a lot of orders. HCC is a play. So I think there are, you can say, numerous players. We don't have any firm view on these stocks. But I think if you look at the trend of the infra spending in India and the way it is poised to be over the next 5 to 7 years, I think many of these construction companies are poised for good times.
Got it. All right. Hi, Avnish. Good morning and good to see you in. What about the insurers? Yesterday, HDFC Life came out with a set of numbers. The BNB margin contracted and the street didn't like that. But now in their con call as well as in their comments to CNBC-TV18, they've said that ULIP as a percentage of their mix was higher. And some of those price increases got postponed by 2 to around 3 weeks. And that's why, the street is optimistic that maybe the second half of the year could look better. Your approach to HDFC Life in particular and the life insurance companies, because post those numbers, all life insurance sold off.
You see, life insurance is a space which is actually always a very long-term play. There are not, I would say, any shortcuts there that you will suddenly see like it happens in many of the other sectors, that any sharp jump in profitability or margins over there. Now, I think whatever you can say in terms of VNB margins and all, I think there could be some improvement over there, but even in you can say the actual impact of that always comes with a lag and very gradually. And I think if you look at, say, past 2-3 months, all the insurance companies, there was some build-up around that. Most of these stocks, maybe barring LIC, they have not done well over the last couple of years. And people are expecting that now it's the time for the insurance, I think, to go up. The stock should do well. And I think all the stocks also rallied by, say, 20-25% from there. Now, I think in light of that, some sort of a correction has happened yesterday. It can't be ruled out, which is a very natural phenomena. But I think one will have to look at these stocks only from the longer term viewpoint, because in insurance companies, you can say, yes, the sell-off has happened, but the investor should look at only in the medium to long term, not exactly in the near term.
Okay. All right. Amnish, stay with us. Coming back, Anuj is here standing by with what he's making of the setup. Anuj, good morning.
Morning, Prashant. Well, it looks like the market's in a mood for some more time correction, and the price damage may be done, but in terms of time correction, maybe some time still left. This market has been now correcting technically for the last 13 days, but the real price damage has happened only on 3 days. X of that, the market's been quite flat on most days. The FI selling intensity is now down quite a bit. It was about 15,000 crores at the peak of the correction. It's now down to 1,700 crores yesterday, which was the lowest selling number that we have seen in all of October. That's good news, right? Even the shorting keeps going up from the FI side. They are now 34% net long. They were at 85% at the start of the series. The put call ratio extremely oversold. So the point I'm trying to make is if the market bounces from here, it will be big. The only issue is, does the market have a trigger to bounce back? Can oil provide that trigger? Perhaps, especially for oil marketing companies. Brent price down, election risk out of the way, so that could be the sector to focus on. Coming to index then, on the Nifty, the levels that I'm watching out for, first support is 24,900 to 25,000, the low of last few days, and the most important number, 24,694 to 24,750, the October lows. That should not break, otherwise the trend becomes negative. Resistance first comes in at 25,075 to 25,150 based on the options data, and then, like yesterday, 25,200 to 25,300, the 10 and 20-day exponential moving average. The Bank Nifty is important because today is the weekly options expiry on the Bank Nifty. It's one shade better than the Nifty. The only risk here is the 20-day exponential moving average halt, not just for the Bank Nifty, but also for HDFC Bank, because both the index and its biggest component, both are trading very close to the 20-day exponential moving average. That number on Bank Nifty is 51,950, and on HDFC Bank, it's at 1680, right where both these are trading. As I said, today's options expiry, so the range as per options data is 51,600 to 52,200. My basic premise is that you stay in this range, but if you start to break this range, then the move could be big on either side.
Okay, all right, Anuj, got it. It just reminds me, right, only a couple more weeks left for that Nifty Bank options expiry, the weekly product, and then it has to phase away.
Since you raised the point, just want to make a point. That was ending from 20th November, right?
Yeah.
Make it 19th November now, because 20th November is Maharashtra election, Mumbai election. That means it's market holiday, and that's the big heart of Mumbai. We'll be voting, but rest of you from in different part of the country can have a holiday.
All right. Anuj, thanks so much for that. And yeah, thanks for reminding us. 20th indeed becomes a holiday, but it is voting day, not really a holiday. Need to go out and exercise your right to vote. Well, on that note, we need to take a quick break. Come back on the other side, and we'll have the technical experts join in, Mitesh Thakkar and Sudarshan Sukhani, with today's trading setup and some trading ideas.
Welcome back. Well, Gift Nifty suggesting that we pull back close to around 80-90 points to kickstart trade because of the weakish overnight handover. But how do you approach trade then from there on? Mitesh Thakkar and Sudarshan Sukhani join us this morning. Good morning, gentlemen. Thanks a lot for joining in. Well, Mitesh, you go first. We're going to be getting a dip of around 80-90 points this morning. Will you look to buy into it?
Good morning, Nigel. Not looking to buy into it. I think, I've been saying that this market is contracting and we are seeing a lot of supply at higher levels. And every time we've tried to go on to sustain beyond 25,200, we've seen heavy intraday selling. So my sense is that we are not yet done with the declining part of the movement. It can still turn into sideways activity if 24,800, 750 zone holds. But broadly, it's a 25,300, 24,800 kind of a market, and try to buy near the lower end of the range. Otherwise, I think in the middle of the range, which is where we expect to start today, I would not be very keen to take a long position on the index. And my belief is that in case we break 24,800, 750, then I think we are looking at a slightly deeper correction.
Got it. Okay, all right. Thanks for that, Mitesh. Sudarshan, what about you? Mitesh is not looking to buy the dip. What about you?
Yeah, good morning. See, I am looking to buy a dip, but as I said yesterday, you have to wait for the proper opportunity. Yesterday, the market started up and throughout the day, it was drifting down. So there was no opportunity, no momentum on the upside to say, okay, this market is finding a low and go ahead. So with that view, that we want to be buyers, but we want to see momentum in the market on the upside before we buy. So we let the market drift down today also. But if you see a few hours of base building, if you see a few hours of a point where the markets refuse to go lower, I would be a buyer there. It's not easy to say at what level that would happen, but the opportunity exists for a long position once the market stops falling.
Okay, got it. Gentlemen, good morning. Good to have both of you here. Sudarshan, in terms of specific trades, what would you have?
Well, I only have long positions. As I've explained so many times, selling in a bull market is very difficult. Apollo Hospital is a buy with a stop under 7,040. BEL, which is having a rather weak and tepid up move. So far, it's not shown very strong momentum, but then you never know. That's a buy with a stop under 280. Balrampur Chini has been making new highs, and that's a good opportunity to go long when it consolidates as it is doing now. Buy with a stop under 634. And finally, Hind Petro may be bottoming out. See, there are big questions here whether these buy on dips will work or not. So they are not intraday, but they are essentially for a few days with a stop loss. Hind Petro has a stop loss of 410. For each of the stocks, follow the stops and stay with the states till either you make a profit or you get out.
Okay, got that. Hind Petro, that one looks interesting. Well, let's find out Mitesh's picks. Mitesh?
I have more of sell calls today. Jindal Steel is a sell with a stop at 982.5 for targets of 940. Cipla has had some kind of a breakdown, so sell here with a stop above 1590 for targets of 1530. Bajaj Auto also, I think, is giving first signs of profit booking. Keep a stop at 11,750 plus levels. Look for a decline to about 11,000. And on the buying side is Indian Hotels. If it crosses 716, 717, buy with a stop at 704 for targets of 745.
Okay, all right. Those are individual trades coming in. By the way, Mitesh, just a quick word on BSC. It ended flat yesterday, but there's a brokerage report saying, well, maybe it's done too much and they've downgraded their target. Stock will react. Just wanted technically how it's looking to you.
So I think it doesn't look like getting into a big corrective mode, but extremely overbought levels, which means that yes, the stock can react and give a pullback to its 20-day average kind of a thing. I think the support pivots which I look at on the charts of BSC, one would be closer to about 4,100. and then the near-term support is closer to about 43.50. So I think either of these levels could be tested, and we should see some consolidation before the stock takes another directional turn.
Okay, all right. Mitesh and Sudarshan, thank you very much for joining us. We'll speak again at 9:10. We'll also have on the other side of the break the pre-open, which is 3 minutes away. Prakash Devan will be joining in. We talk about Telecom. So lots of stuff coming out of the sort of mobile congress in Delhi. The minister speaking. We also heard from the Bharti chief, Sunil Bharti Mittal, and others. So we put the focus on that on the other side. Stay with us.
Welcome back. This is Open Exchange, and we are coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, let's get in some derivative strategies before we move on and get in the initial, rates that are coming in. Rajesh Palvia, VP Technical and Derivative Research at Axis Securities, joins us on the show. Hi, Rajesh. Good morning and good to see you in. Tell us, what are your strategies?
Good morning, Nigel. So looking at the market, Nifty is stuck in a very tight range, and this is the second consecutive week where Nifty is not able to cross 25,100, 150 supply zone. Looking at the data setup also, 25,100, 25,200 have attracted major call writing positions. So these area may remain as a supply zone for near-term structure. But on the lower side, 25,000 and 24,900 have major, put-based concentration. So I think we are going to witness a very tight range for Nifty for next couple of days. Either side breakout, either break below 24,800 will attract major supply pressure, or a breakout above 25,150 will attract more buying action or short covering action in the market going forward. To play this move, I think if we get any dip towards 25,000 should be used as a buying opportunity, because we have very tight range for the market. So I think wait for a dip towards 25,000 for Nifty spot. At that time, you can initiate a long position in 25,000 call option, which was closed at around 112, 113 rupees. So if you get that call option around 85 rupees, you can initiate a long in that call option with stop loss of 45 rupees. And in the pullback towards 25,100, you can book profit. So I think that time that call option would trade around 145 to 150 zone. So buy 25,000 call option around 85 rupees. Target is 145, 150. Keep your stop loss at around 45. For Bank Nifty, major supply zone is still placed at around 52,000, 52,200 zone. So until Bank Nifty not crosses above 52,200, I think here also we may see a range-bound activity for some more couple of days. On the downside, 51,600 is the important support area for Bank Nifty spot. So I think range-bound activity in the Bank Nifty also. Breakout above 52,200 may attract short covering action. Some of the stocks idea where we are focusing on the long side. First one is Siemens, very strong buying action in last couple of days. The way stock has moved up, I think there is a possibility that stock may attempt to break out above its previous swing high. So I think Siemens can be looked at to buy for upside target of 79.60 to 8,000 kind of level. Keep your stop loss around 7,720. The second stock where we are focusing is from the chemical space, that is Deepak Nitrite. This is the third consecutive day where we are seeing higher high-low formation. Stock managed to cross its 50-day moving average. Looking at the near-term, short-term structure, we believe Deepak Nitrite may extend its gain. Possible target towards 3,000, 3,020 we can see in the near term. So one can buy Deepak Nitrite with stop loss of 28.70. And the third stock is from pharma space, that is Ipca Lab. Again, continuity of uptrend, a series of higher top, higher bottom formation. Stock is outperforming in the pharma pack. So we believe that Ipca Lab can extend its gain. Possible target towards 1760, 1770 we can see in near-term basis. So Ipca Lab is buy with stop loss of 1670.
Okay, all right. Thanks very much, Rajesh, for that. And We'll, of course, come back to you for more later. Now, let's talk about Telecom. Prime Minister Modi inaugurated the 8th edition of the India Mobile Congress yesterday. Bharti Airtel Sunil Mittal has called for laws to ensure that satellite companies like Elon Musk's Starlink pay license fee and buy spectrum. Let's actually listen to that soundbite.
And those satellite companies who have ambitions to come into urban areas serving elite retail customers just need to take the telecom licenses like everybody else. This is a simple solution which can be done on a global scale, and India can again show the way in this particular regard.
Okay, well, the minister, Jyotiraditya Scindia, of course, ruled out an auction stating that spectrum will be allocated to satellite communication companies at the price determined by the regulator. Not for free, but no auction as well. Listen.
For SATCOM, spectrum will be allocated administratively. Now, that does not mean that spectrum does not come without a cost. What that cost is and what the formula of that costing is going to be will not be decided by you or me. It will be decided by TRAI. And there is a paper that has already been circulated by TRAI, and we have a regulatory authority for telecom, and that regulatory authority of telecom has been empowered by the Constitution to decide what that administrative pricing is going to be.
And Mr. Elon Musk obviously is watching all these developments in India very, very carefully, because on the platform X, in response to another post, Elon Musk said, and I quote, that this is much appreciated. We will do our best to serve the people of India with Starlink. So the battle lines have been drawn between international biggies in satellite communications like Starlink and, of course, Indian incumbents like Jio and Bharti, which are fighting hard to protect their turf. Because, in that speech, Mr. Mittal, in fact, went on to talk about how much investment Indian service providers have made to lay out these terrestrial networks to build the entire fabric, 4G, 5G, etc. So, that's where we are at. I think we have, some experts also joining in.
One thing,
Yeah.
I think this is a basic thing which I don't know, but I'm just putting it out there. Maybe our experts can answer that. The spectrum which was so hard fought, right, in those auctions in 2009, which was the big one, the first big one, and then later on for the 700, the 800 megahertz, 900 megahertz. Not all spectrum frequency is in short supply. I'm not sure, at least, whether the spectrum that we're talking about is the same spectrum which was so hard fought in auctions, or whether this is some other spectrum.
Something entirely different for satellite communication.
Correct,
yeah.
which could be in abundance. So it does not necessarily have to be the same spectrum which is being allotted now, which was auctioned earlier. So that's just one point. But I think we'll have to check with experts.
Absolutely, we need to get into more technical details, because this is the new frontier, so to speak, where the battle lines have been drawn. We have Prakash Diwan with us to take the conversation forward. Of course, Amnish has been in conversation with us in any case. So telecom is in focus, gentlemen. Prakash, so again, we need to wait to understand some of the nuances that whenever Starlink comes in, what is the frequency at which they need to operate, and what will be this new spectrum. That clearly the minister has said that there's no auction. It will be administratively allocated, because that's the global practice. And he said that India needs to be in sync with the global practice. But it'll come at a cost. It's not going to be handed out for free. How significant do you think this is? Is it too far in the future that we're talking about? Because this seems to be the next frontier.
Good morning, Shurvi. So a couple of things, and this is all on the basis of whatever I've been catching in terms of my reading and talking to some people. This whole think of the administrative allocation of satellite spectrum, which is the global protocol and trend, makes sense in a lot of nations where there are not too many people who are capable of providing this kind of an alternative service. I mean, there's not much of an option. You have smaller nations where it's just been kind of allocated at a price, because there's one agency, one supplier who's kind of made itself capable to do that, and it's just a matter of price between the government and the service provider. In India, Bharti's been working quite a bit on this whole thing. Jio may not have focused on satellite spectrum or satellite broadband yet, but they are a lot into the last mile connectivity, which is going to be a different part of this, which is a different angle to it. So, it makes sense to have a auction-based listing, but it's a government, in the government's wisdom, if they don't want to set a trend or change that and follow the global trend, so be it. But the price hasn't been allocated, as the minister very rightly explained. That's going to be decided by a process which the TRA is going to follow, and they've outlined some broad principles, nothing very specific yet that you can make out from that. But the next question that Starlink and people like Starlink would have to face is the price right enough or justified if the allocation is made at XYZ price? So I think there are lots of things that you need to wait and watch for. But the basic this thing is, the market is massive enough, is huge enough for people to come participate, and still we will have last mile connectivity being listed. In the same breath, at the conference, the minister has also talked about BSNL rolling out 5G by 2025. Now, you can imagine, we are on two sides of the spectrum. Here's a state provider who's looking at that, and then the satellite providers who are coming, wanting to come. So, lots yet to be cleared, Prashant.
Oh yeah, it's something to watch going ahead. But near-term tariff hikes are important, right? And the minister also commented on tariffs, the hikes which happened off very low base and need for more. Listen in.
चाहे आप OFC फाइबर की आप बात करो, वही दाम 95% गिरी है। 1 GB डेटा आपके लिए 10 साल पहले 289 रुपीस होता था, आज 8.8 है। 1 मिनट वॉइस कॉल का 51 पैसे होता था, आज 3 पैसे है। और निवेश कितना हुआ है? पिछले 1.5-2 वर्षों में 4G से 5G जाने में करीब 2 वर्षों में 4,26,000 करोड़ का निवेश देश में टेलीकॉम सेक्टर में हुआ है। 10% वृद्धि हुई है दामों में, पर 10% वृद्धि हुई है दामों में मतलब क्या? कि जो 3 पैसे होता था वो अब 3 पैसे 3.3 पैसे हो चुका है। और क्या था ये दाम? ये 51 पैसे था। तो जहां निवेश किया जाता है उस निवेश का रिटर्न भी आना जरूरी है, नहीं तो 4G से 5G, 5G से 6G हम लोग नहीं पहुंच पाएंगे।
Prakash, you heard the minister. How should we read this? Just generic comments overall, shows the intent. But is there anything actionable from a stock market point of view?
No, so I think ARPUs keep on, firming up is very clear, and I think his intention is more from this thing on the BSNL expansion that's happening. Focus on tower companies. There is no better way to play this gold rush with the shovels and picks. Kind of this thing. You will find tower companies doing much better, Prashant, given the fact that expansion is something which the government is also very keen on letting happen in terms of price and in terms of geographical representation. So my bet is on tower companies. There are a couple of them which are very efficient, which focus on BSNL. You need to look out for those, and those will definitely play a very phenomenal part in this expansion.
Prakash, thank you very much. Quick conversation this morning. Appreciate you joining in with some of that perspective. I just want to quickly, if we have time, do we have Sudarshan? We want to just address that BSE. Okay, let me just quickly read out some of the, if you can pull up the graphics. So this was a brokerage call coming in from Jefferies, and we just have the lines put out. Basically, what Jeffrey seems to be saying with regards to the BSE move is that, remember, the discussion paper on F&O was put out on the 30th of July. Stock price of the BSE was about 2,500 rupees. The price has now moved all the way up to about almost 5,000 rupees. I mean, 47.50 or so as of yesterday's close. And they're saying, well, this is excessive. They've increased their price targets, but of course, I mean, the current price is way higher than where they are at. And they're saying the fair value should be about 3,500 rupees for this one. So, we'll talk more about this in just a bit from now. But we've got a couple of seconds to go for the market open. Let's just quickly look at that, and then we'll look at the stocks, etc., we're starting about, what, a 0.25%, less than a 0.25% lower, 25,020 on the Nifty. The Bank Nifty is down about a 0.25%, 51,787. Sensex is down about a quarter. The mid-cap index is down about a 0.25%. So uniform 0.2% cut across the board on all indices. And of course, you've got about 20 stocks higher and about 30 lower. That's the indication as far as the Nifty heat map is concerned. Advanced decline early, but it's almost 1:1. A little more than advances as compared to declines at this point in time. So actually even lesser, higher right now on the Nifty heat map, as you can see. 45 points lower. It's a flat to slightly sideways open, 25,015. Surbhi.
BSE is actually reacting to this note. It's down about 3.5%. The Jefferies note that's calling for 3,500 on the stock. The stock's already at 4,500. That's been the nature of the run. But anyway, to talk about the large cap screen, HDFC Life is trying to recover from the blows yesterday. It's up about 1%. SBI Life as well. Some reassurance that's come in from the management in terms of growth. That seems to be working for the counters. Bajaj Finserv is also on the upside, about 0.5%. But the market overall is subdued, about 43 points lower on the Nifty. The Bank Nifty is losing about 90 points right now. Let's look at the losing side of the screen then. M&M, TCS, IndusInd Bank, Apollo Hospitals, Infosys. It's really cutting across sectoral lines. Not very clear sector trends. But some of the heavyweights which are down include ITC, ICICI Bank, Lever is on the lower side. TCS is losing ground, 1%. So it's sort of a slightly weak morning, pretty much across the board, so to speak. Most of IT is on the downside. FMCG is not finding much headway, and banks are somewhere in the middle. Look at HDFC Bank, it's up about 0.2%, offsetting the negativity from ICICI Bank. So that's really where it is. But life insurance and insurance in general is definitely an area in focus. A lot of those stocks, Bajaj Finserv, Finance, they're all up and about. There's also Shriram Finance, by the way. So insurance, NBFCs, that's the favorable color. And BPCL is doing its thing again, 1.5% up on BPCL. Even the other oil marketing companies, for obvious reasons. HPCL is up about 2.5%. IOC is up about 1%. So the whole move on oil marketing companies, thanks to the collapse in oil prices, that's a very clear trend that stands out this morning. Nigel.
Well, the stock of the morning is Rallis, actually. The revenue grew by close to 11%. The EBITDA is up 24%. And just take a look at that stock. It's flying away as we speak. It's up close to 9%. After a while, I've seen Rallis rallying in this sort of a manner. So big move is what we're seeing out there. The other stock that's doing well is Ashoka Buildcon. They've got an LOA for a project of around 1,126 crores from BMC. So that's doing very well today. A couple of other notable movers include GR Infra. They have got an LOA for around 1,800 crores from the Maharashtra State Road Development Corporation. So good move is what we're seeing on that one as well. And let's pull up Godrej Properties. Some of these stocks have been doing very well in the last few days. They've emerged as the highest bidder for 3 adjoining plots in MMR. The revenue potential, they said, is close to around 3,500 crores. I think we should just get the right stocks up for you on the screen. Godrej Properties is what we're talking about. GR Infra is the other one that we spotted, and Rallis as well. That's the other stock that we were looking at. So good moves on a whole host of these names. For the time being, back on Maharashtra as well on a very low base. Well, that one as well has, is up close to around 2%. The ones that are losing out, as should be mentioned, BSE now pulled back close to 4%. Angel One was flying away yesterday. It's cooled off close to 1.5%. We'll have the management in a short while from now. But a good, decent looking screen. HDFC AMC is reacting favorably to its numbers. So big move is what we're seeing out there. And HDFC Life, I think, the initial tick was green on that one as well. So yesterday's down tick actually has got bought into today. Most of the street liked what the management had to say. HDFC Life is the one we're talking about.
All right. Let's have the stock up for a quick bit. Yeah, 0.75% higher on HDFC Life right now. 36 points lower on the Nifty. We're at about 25,020 at this stage. Just a few other names. Angel One, which went up 14% by far. Actually, maybe it was more. Is by far the biggest gainer. It's done about 1.5% just in profit booking. All the other brokers also were rallying, right? So Motilal was up 10% yesterday. It's down 1.5%. And maybe we should also just look at JM Financial, which was the other big mover yesterday on the broking side, capital market plays. Let's see how that is doing. It's up another 3%. So no problems there. KEI, who we spoke with, I think Nigel mentioned, is down about 4%. And Cochin Shipyard is down about 3% as well. So this is broadly how we are starting the day. CDSL is up another 3%. Has been a fantastic last few sessions. HDFC AMC reported numbers in the last hour of trade yesterday, 4% on this one. HDFC AMC has got the second largest volumes on the NSE. And we were talking about oil marketing companies, right? So HP is up another 3% after yesterday's 4% pop. And it's never alone, so you should look at IOC and BP as well and see if there is some action there. Sterling Wilson Solar was up 5%. There was a call yesterday and we highlighted some of the takeaways from that call. It's up another 3% this morning. Stocks, of course, had fallen from 800 levels to about 550, which was the recent low. Stocks back at about 600 now. Atul Mehra is with us now, fund manager at Motilal Oswal Asset Management Company. Atul, good morning. Good to have you with us here. Thank you for your time. I just want to start with at Motilal, and we've spoken about this with Ramdevji many times. Financialization and especially the capital market segment has been a big focus area for as a thought process.
Yeah.
So just wanted to get a sense from you. I mean, what's your thinking here? Start with exchanges first, and then, of course, brokers and wealth managers second, and maybe also asset managers. What's the thinking? Go on, Atul.
Hi, Prashant. Good morning, and thanks for having me on the show. So, yes, so if you look at capital markets ecosystem, I would say that we are still in the very early stages. We have come a long way. Like, we've seen phenomenal growth in the last few years, especially the last 4 years post-COVID. But if you think about it, the numbers, even today, like we have about 4.5 crore unique mutual fund investors in India. Even DMAT, if you look at it, while the gross number is about 17 odd crores, uniques would still be about 8 to 9 crores, not more than that. So if you draw a little bit of a parallel to what happened to the US in, say, 1980s onwards. So 1984 in the US, the AUM, equity AUM was about $80 billion. And it went to like almost $3 trillion in the next 2 decades, right? So during this phase, you saw that the participation, which was low single digit in terms of household penetration of equities, that went up significantly. And today, like US households own more than, like most of the US households have exposure to equity markets. So I think what has happened is after COVID, we've seen this in terms of digitization wave helping the capital markets wave. Markets have obviously done well. But we believe that even now, we are still in the early stages. So in the next 10 years, you would see that across the board, capital markets participation should continue to do well, and we will see more and more participants coming about. And that underlying theme is what is reflected across exchanges, brokers, asset management companies. So it is the same theme, but everybody is a beneficiary because it's in the same value chain. So we are bullish in terms of the prospects for in terms of capital markets, ecosystem, financialization, and digitization, and so on.
Atul, so bullish on the prospects and also comfortable with the valuations? What about the second part of it?
So that depends. So we always like have a bottom up in terms of stock picking framework. So we have exposures in terms of some of the names in the ecosystem. But again, like I would say that valuation is a function of the growth outlook ahead and the capital efficiency of the business. So a lot of these businesses are extremely capital efficient. Most of them are agency businesses. You don't need money to grow these businesses. So capital efficiency is absolutely amazing. Growth is on a tailwind. And obviously some of them have done exceptionally well. But in the context of the growth and capital efficiency, some of them are, I would say, even now reasonably priced.
Hi, Atul. Good morning and good to see you. When you manage, I think, the large cap fund as well. And how are you positioned out there? HDFC Bank has been a bit of a drag, for most portfolios in the last 18 to 24 months. But now of late, suddenly it appears the big boys come out to bat. Your view on this large name, do you think now the stars are aligning and things should look up from here on in terms of a stock price move?
Yes, so I would say that HDFC Bank, it's gone through a major time correction for the last 5 years now, almost like we haven't seen any return on the stock. And if you look at the valuation, derating has been absolutely massive. So it has derated in terms of the valuation multiples over the last 4 to 5 years. So at this point in time, what we've seen, at least again more lately, is with this entire FII sell-off that we've seen over the month and so on and so forth. So some of these stocks, they were starting to do well. But with this recent bout of like $8 billion of selling, again, like a lot of the mega caps have sold off. So, if you, the way we think about it is like in the portfolio that we run in the large cap mutual fund, we believe that some of the banking names are very well placed. Valuations are very attractive. And as and when you see in terms of participation from FIIs come back, and even otherwise, like as the number delivery comes about, you will see that some of these stocks starting to outperform again.
Atul, just sort of talk about one more sector, and I think you guys were pretty early on Zomato, right? And the whole turnaround, the complete change in the company has been phenomenal, and the stock has been reflecting that, right? So kudos on that call. But what are you making of quick commerce? Because now it's far more than just talking about one stock, right? A lot of companies, FMCG companies, are talking about disruption. Delivery channels are really going all over the place. We had DMart refer to it, we had Dabur refer to it. So how are you looking at the whole quick commerce consumer space? When I don't know if you have any thoughts on Swiggy, and also how it is impacting the rest of the consumer ecosystem. So what are you playing here, and what would you stay away from?
So Subhi, in terms of quick commerce as a space, in all our conversations and all our ground checks, it suggests that this is an absolutely new channel, and this is a channel of the future. Because what quick commerce has been able to do is something in terms of very unique, and it doesn't exist anywhere in the world. Like the kind of delivery ecosystem that we have in quick commerce here, and it also is a function of the amount of labor that we have, the cost of labor, etc., etc. So all those enabling factors and the population being very dense. So all these factors coming together, quick commerce is a very Indian phenomena. And it is a channel which is becoming much, much bigger. It's growing exponentially, and the use cases are only expanding by the day. So we are, in terms of very, very optimistic on the future prospects for quick commerce. It's also enabling, whenever there's a new channel that comes up, it enables new set of business models. Like, for example, if you think about e-commerce, when it came up, Amazon and Flipkart and all, it gave birth to so many different brands, so many different direct-to-consumer businesses, which would not have had access to the traditional general trade channel. So similarly in quick commerce, again, we are seeing not just the channel itself, but there are many businesses which are born on quick commerce and which are scaling very, very significantly. And overall, I think that this is something that is going to be a mainstream channel in the next decade or so.
Got that. Atul, just this new frontier for India, of course, is building out the semiconductor ecosystem, right? OSAT is one, and now, of course, we're talking about proper fab, but of course, it's coming through from some of the largest players like Tata's, etc. From a listed perspective, are there any? Are you trying to look? Have you looked? Have you found any? How to play this?
So EMS is one direct proxy to this particular space. So EMS has been a theme which has played out extremely well. And the prospects even from here for EMS as a theme are fairly strong because the focus is on manufacturing, the focus is on import reductions and more in terms of domestic manufacturing. So while we don't have a direct in terms of semiconductor play as yet, but EMS generally as a space is a direct proxy on the manufacturing theme. So I think that is how it is at this point in time. There are many new businesses also which would likely come in the market over the period of time. And also like some of the traditional companies also are now getting into this space. So I think there are opportunities across the board, and the best way to play this theme is through the EMS players.
Okay. All right, Atul, we'll leave it on that note for this morning. Thank you very much for joining in. Good conversation. We look forward to the next one. You have a good day. Well, moving on now, let's focus on earnings. And HDFC Life is really the stock in question. Look at the stock right now. It's recovering and it's undoing a lot of the damage that it saw yesterday. It's very clear that the conference call that the management had post-market hours, that's kind of sort of soothed nerves, and it's kind of put to rest some of the concerns out there on the margin front specifically. In fact, the total APE and the retail APE for the company beat estimates. The VNB margin was below expectations. Our colleague Yash caught up with Vibha Padalkar, the MD and CEO of HDFC Life, and began by asking her about the APE growth as well as the guidance for this year. Take a look.
I mentioned that in the first half of the year, that growth on the upper end would be around 15%. We are revising it to say growth for the full year FY25 should be in the range of 18 to 20%. The reason why this gives me the confidence level is the first half of the year on a WRP basis, we grew very well at about like you said, 28%. APE basis, we grew by 31%. Whichever way you look at it, very good levels of growth. Beat both the industry, overall industry and the private sector very, very comfortably. Market share expansion of 60 basis points. We achieved a watermark of 11% in terms of overall market share of the sector. And many such underlying nuances in terms of retail protection continuing to be strong. Number of policies growing at 22%. So very, very wide spread growth rather than concentrated. Tier 1, Tier 2 and Tier 3 growing very comfortably in their 20s, different levels in 20s. Agency channel roaring back in terms of growth being faster than company level growth. So any which way you cut it, growth has been extremely secular, and that gives us the confidence that the buoyancy that we're seeing in this sector hopefully should see us through towards the end of the year. Last point I want to make is some of the hesitancy, like I mentioned to you last time, was because of the rollout of surrender charges that was causing a little bit of uncertainty because we didn't know, is it going to get rolled out on 1st of October or not? So that's now behind us. It has got rolled out. 95% of our products are now compliant. So we have all the products in our arsenal to be able to go out and sell. Conversations with our 300 plus partners are very constructive. And I think in a quarter's time, towards the end of this quarter, quarter 3, even that will be history and we will move into a business as usual mode in quarter 4.
The last interaction, of course, you had spoken about a guidance of 17 to 18% on the value of new business. You're on track as far as the first half is concerned because there you see a growth of 17% on VNB so far. Confident of maintaining this growth rate and sticking to that guidance of 17 to 18% on VNB? And is there some sort of an upward bias to that 17 to 18% as well?
Yes, so we will target in that range, and right now I'm saying 15 to 17% with the we've already reached at 17%. Now, in terms of upward bias, I will have a better view on this by the end of quarter 3, early quarter 4. There are multiple conversations, as one can imagine, due to the surrender charge implementation on all the products other than unit-linked products. So it's fairly significant. And we are in a multi-tie situation in each one of our relationships. So we have conversations with our partners. Partners have conversations with other insurance companies whose products they sell. They come back to us, they come back to them, and so on. So all of that is going on right now. So things will settle down over the next, in this coming quarter. And we will certainly have a better handle. All things being equal, I think we should be in a slightly advantageous position on margins versus peer set.
Slightly advantageous position on the margin. And that's exactly what I want to speak to you about. For margins, what you had guided the street for as far as FY25 is concerned is 26% plus minus 100 basis points. Now, as far as the first quarter of FY25 is concerned, the margins came at 25%. Second quarter, they dipped a little out of your guided band to 24.3%. Now, what that takes the H1 margin to is about 24.65%. Very clearly, what I want to understand from you is that in the second quarter, what were those couple of things which impacted the margins to make them fall out of your guided band? And are those problems, are those concerns here to stay for the rest of the year, or could they see an improvement and help margins to go up?
Just to deconstruct quarter 2 on a standalone basis, Last year was 26.3%, somewhat in a different era because equity markets were very different. But nevertheless, 26.3% versus 24.3% in standalone Q2 of this year. This 200 basis points differential is explained as follows. 100 basis points was simply because of product mix and largely because of unit linked, what we have been articulating. For example, in H1 last year, unit link was about 28%, and that increased quite significantly in H1 this year to about 36%. So largely due to unit linked and a little bit due to annuity, but I would stick with unit linked. So that is of the 200 basis points, 100 basis points is due to product mix. Another 100 basis points is because of a conscious call on repricing of our non-par products that we had to phase out. I'll explain. So we had to phase out some of the earlier products that would no longer be compliant after 30th of September. Given that 40 odd products had to become compliant in a very short period of time, and this is, when I say compliant, all the features in the product brochures, but more importantly, on our IT systems. And you can imagine all the nuances because earlier there were no surrender charges at the end of first year. So we had to redesign our IT processes and the customer facing the system to be able to change the product itself, the product architecture itself. So all of that takes time. So we had a toss between, do we reprice our old products that are anyway going to be phased out, which would mean keeping some of our new products on the back burner. Hence, we took a call that it is important for us to have new products from the word go on 1st of October. And hence that somewhat delay in the pricing by about 3 weeks had a 100 basis points impact on our margins for the standalone quarter. On H1, it's about a 30 to 40 basis points impact on H1, but on a standalone Q2, it had about 100 basis points impact.
Okay, so if I understand that right, of course, leaving the point on growing ULIP out of the total APE share aside, there was certain amount of price increase which was deferred by about 3 weeks, as you pointed out. And if that wouldn't have happened, it could have added 100 basis points to the margin straight away. Is that correct?
Yes, except that it would be price decrease. We had to price it downwards because of interest rate movements. These were on a non-par product, but we held on to whatever were the prices, and that had a 100 basis points
impact. Okay, that clarifies one bit, on the margin impact. The second one is, of course, a growing share of ULIP portfolio out of your total AP. I remember the last time that we had spoken, you had said that, boss, ULIP share is rapidly coming down. We won't have to wait for too long before it comes down to sub 30%. I want to understand from you, between the first quarter and the second quarter of FY25, what is the movement that has come about as far as ULIP share of total APE is concerned? In the second half, do you expect this share to go up again? If you could clarify on both these points.
Yeah, so first quarter, ULIP share was about 38%. In Q2 standalone, it had come down to about 34-35%. Some of our channels, say our agency channel, came down to sub 30%. Overall, bank assurance was still a little bit elevated, but some channels got there even quicker. And what we, as a strategy, when we looked at the customers that have come on board, our customers onboarded in Q2, more than 70% of those customers are new to HDFC Life. Now, our realization is that, yes, ULIP margins are lower, but these customers are new to us, and our ability to sell to these customers is going to be quite meaningful. Upsell other products, more margin accretive products, different solutions to these customers and their family members. So rather than saying no to these customers, in the pecking order, let's go for growth, let's go for increase in or growth in value of new business, and margin will be an outcome, like I mentioned last time. However, with the caveat that there will be a floor to the margins. Margins are not going to be in a free fall, but we're not going to be tethered to a particular margin.
Well, that is HDFC Life, and stock is up 2% as we speak. By the way, the market has recovered.
Yes.
We're up 10 points now on the Nifty, which means that there is a nice pullback which has happened from the day's low. By the way, the day's low was around right after market opening. So I think from 9:20 or so, in the last 20 minutes, there has been a decent pullback. So from about nearly 25,000 kind of levels, actually the low today was 24,994. Which is, of course, the gap down. From there, we've pulled up almost 75 points on the Nifty. Take a look at the Nifty Bank as well, because I think Nifty Bank is also pulled back from the day's low. The opening low was 51,711, and we are about 200 points off the day's low for the Nifty Bank, currently at 51,956 or so. So this is broadly the picture. Maybe take a look at what is causing some of this pull. So HDFC Bank, of course, is the biggest contributor. We should have the stock up. 30 index points coming in from HDFC Bank. So that's a 16-17 rupee move. And there is Reliance, which lost about 2% yesterday. That is also, I think, trying to pull back. It's got about a 10 to 11 point push, index point push on the Nifty. So 2,700 is about 0.4% higher. There is Bharti as well, which is, I think, up not by much, I think, on a day-on-day basis. But these are the three names, HDFC Bank, Reliance and Bharti, in terms of contribution to the Nifty.
Just one quick point on HDFC Bank. It's at its 20 DMA right now. The 20 DMA is at around 1,702. So that's the important mark. The technical factor will play out if it can sustain above that level. So just keep an eye out on that one. It's been moving well for the last few sessions. We had mentioned this yesterday as well. 20 DMA, very, very close out there. You wanted to trade about those levels.
All right. We'll see if it manages to take out the 20-day moving average near term. It's an important pivot. We take a break. Dinesh Thakkar of Angel One will be joining us to talk about their second quarter earnings. Stay tuned.
Welcome back. Well, let's look at the next company in focus, and the one that we have on our radar now is Angel One. Of course, Angel One came out with its Q2 results, and there is so much that's been going on in terms of regulatory changes that impacts, of course, broking companies. Let's pull up the one-year performance of Angel as well. The stock has done well, about 50% up in the last 1 year. And the last 2-3 months has seen the stock go on an absolute tear. Still not at its all-time high levels. That level was closer to 3,800, but yeah, it's not too far away from that either. Now, talking about the second quarter performance, revenue, one could argue, was a slight miss compared to some of the street estimates, but there's a big improvement in the operational performance, and that was received very well by the market. The stock really zoomed ahead once the numbers came out. So what is the road ahead looking like? Dinesh Thakkar, Chairman and Managing Director of Angel One, is with us to take the conversation forward. Mr. Thakkar, good morning. Great to have you on the show. We're speaking to you after a long, at least I'm speaking to you after a long time, so to be here. And, we have to talk about the business in the context of some major, regulatory changes that have happened. One, on the flat fee structure, right? The whole slab-wise system is now a thing of the past. It has to be flat fee, uniform, and that's getting rolled out. The other one, obviously, is the F&O landscape is going to change quite dramatically come the 20th of November, right? With the number of expiries being limited and lots of other regulations coming in. Let's first talk about the flat fee, because that's already happened and you've also revised your broking charges. The worry was that this would spell the death of discount broking completely. And we've seen some of your peers like Zerodha come in and talk about that, tweet about that as well. What is the impact on your business in terms of revenue, in terms of the way the charges will be levied? Because now I think even on cash trades, you will have to levy something. Cash transactions can no longer be free.
Yeah, sure. First of all, like all regulation which comes in the market, we have seen, most probably they look at investors' interest. And whenever SEBI have come out with some kind of this kind of reforms or some changes which helps investors to build trust and confidence, we have seen big growth in customer base. Now coming to this true to label, where we have to charge as per what exchange charges us. I don't think discount broking houses were too much dependent on these differential prices. It was because of differential prices we were keeping our prices low, or some services were provided free, because we knew back end we are getting some kind of a commission or some kind of a rebate because of scales that we have achieved. But if regulator feels that is not the right model, it should be level playing field. I don't think these platform companies, digital companies, when they are serving a customer is sensitive to some charges to be levied on services what they are taking. That's the reason we went ahead and started charging on cash delivery. And we feel that customers are okay to pay it until the platform is functioning well, glitch free, and they're able to execute their trades. So we don't see any impact in terms of true to label, because we have done few changes in cash delivery, and we have started charging on non-cash collateral which customer provide. We charge interest on that.
Okay.
So what is, sir, if you could just quantify the revenue impact, because back when we spoke to you, I think this was around July, August, when all of this was being put in motion, at that time the indication was that the impact could be to the extent of 8%. So can you just tell us on revenue, now that you've started with the new charges, what is the net impact on revenue and the impact, if any, on your trading volumes as well?
Yeah, if we come to true to label impact, it was what I had estimated was 8%. And by changes that we have made, it will offset that impact, and we would not be seeing any impact because of true to label.
Okay. Now let's come to the other one, right? That's the big one, which is also new. Mr. Thakur, good morning. Prashant here.
Good morning, Prashant.
One weekly option, one contract instead of 3-4 per exchange. Exchanges have been privately telling us that market volumes will drop significantly because of this. Some have said 30%, 40%. We don't know. We'll only find out from the 20th of November. What is your own sense, sir?
See, Prashant, I don't agree that volume would be so drastically lower, because based on kind of an analysis that we have done, total impact on our net income would be in the range of 13 to 14%. Because customer who has decided to come to the market, they will come and they will trade. So they may trade in F&O segment, or they may trade in cash segment. So I'm talking in terms of overall income impact on our total income. But when we come to drop in F&O volume, my estimate would be drop would not be more than around 20 to 22% maximum. But lots of these customers are going to move to cash segment. So we believe that impact on discount broking houses in terms of their gross revenue would not be more than 13 to 14%.
Okay. So 20 to 24% drop in F&O volumes market-wide, right? That is your estimate?
Yeah.
And for you said net profit impact could be 13 to 14%.
13 to 14% maybe in 1 or 2 quarters, because customer base is growing at the rate of 40-50%. So we don't see any impact beyond 2 quarters. And one more thing that you have to keep in mind, when a customer comes to the market, he has certain wallet share for trading and investment. That is going to continue. Because this person will get less opportunity in weekly options, he may stagger this, or maybe his life in this market will increase. So overall lifetime value of a customer is not going to decrease. In fact, it is going to increase. If they lose less money, they're going to stay in the market for the longer time.
Is there any way you can offset this? Is there anything you can do, or exchanges can do?
Discount brokerage houses can do, because we can increase charge per order, because we have seen customers are not very sensitive in terms of charge per order, but they're more sensitive in terms of stability of platform. So there is an elasticity, there is an headroom that we have, but we will look at this kind of a situation for a quarter or so, and then decide whether there is a need to tweak any charges, because we have seen that previously also lots of brokerages tried to give 10 rupees per order, but they were unable to get market share because their platform were weak. They were not really user friendly. So we feel topmost discount brokers have that kind of levers. They can use it if at all they feel impact is beyond what we were anticipating.
All right. I just had one more question, and this is not with regards to you, but no one really knows, but markets have... So this is with regards to exchanges themselves. Do you think, as a insider, as someone who of course knows this business more
In
than
the
anybody
industry, don't
else,
say insider.
yeah, of course. I mean an industry insider. Let me put it that way. So markets are assuming that the one contract per exchange will benefit BSE. Volumes will move, especially on the option side, and they will gain market share. Is that assumption correct? And to what degree in your assessment? This is just purely theoretical, your sense, and we're not going to hold you to it.
It is not going to happen that way. Because we have seen that there is a stickiness on platform. So people who are used to like certain products, they don't shift very easily till the time there is a big drastic kind of like thing which they have to do it compulsorily. If you look at contract size was reduced in April 2024, we did not see any big benefit to neither to exchange nor to this thing. So there can be a temporary kind of like blip in volume for 1 quarter or maybe 1 month. The people were not aware that contract size has reduced. Similarly, I feel when contract size would be increased, ticket sizes increase and lesser number of weekly option, that is not going to create a big shift from one exchange to other exchange or one broker to other broker.
Because the assumption is that people want to trade. So आपको सट्टा करना है, तो आपको you need a product. So now they will do it. They were doing it on NSE. Now it's not like that. You're saying it won't happen. There's no.
No, people are shifting. It is not that they're shifting because of these changes. They want more product. They want more variety. They will do it.
But this per se will not cause this will not cause a big market share shift on the option F&O side.
Yeah, this option rationalization and ticket size change would not be an instrumental to change in platform.
Okay.
All right. Hi, Mr. Tucker. Nigel on this side. Despite all these regulatory changes, you're holding on to your EBITDA guidance of 40 to 50%, right?
Yeah. See, I just look, by all these changes, cost of trade has not increased. So if at all, suppose a client does a lesser volume and staggers their volume instead of 6 months to 12 months, we may be having an extra capacity for a quarter or two, which will get filled as I said that, okay, customer base is growing at the rate of 40, 50%. So cost of trade is not going to increase because of these changes.
But sir, you just said that, brokers like yourselves will check for price elasticity and perhaps, like you just said, you'll be charging on the additional margin that you'll provide, etc. So I'm not understanding. I mean, how is it that you're saying that cost of trading is not increasing with the true to label?
Survi, let me explain. See, digital model have a capacity created for certain volume. And because if there's a drop in volume, which we feel that we would not be able to fulfill capacity in 2 quarters, we need to take some corrective actions because we can't reduce our capacities. But if you look at cost has not increased. If at all, I am anticipating hit would be, say, on exchange 20%. If it goes beyond that, then our capacity would be remaining unutilized for certain amount of time. So we need to do some corrective steps.
Can you just tell us that when you talk about capacity, sir? I got your point that, I mean, you don't want your trading, engine volumes, trading volumes should not fall beyond a certain threshold because then you'll have to take those corrective actions. Do you always work on 100% capacity? And what is the trading volume hit that you are anticipating at Angel One as all these F&O changes roll out?
We work on trading capacity. It's in SEBI regulation which says QSB brokers have to work at a capacity of around 50%. So we are working at the capacity of 45-50%. But if at all volume drops beyond what we are anticipating, so we would be running at a capacity utilization of just 30%. If at all it goes beyond what I am saying. Currently, what we are estimating would be a hit of around, say, 20% in F&O. And that will create an impact of 13 to 14% impact on revenue. If it goes beyond that, so we need to protect our margin for that financial year.
All right. Very quickly, sir, you're also planning on distributing insurance policies through your platform. What's the timeline for that? Also, just give us some clarity. Would you be competing with the likes of Policy Bazaar? What's your strategy to capture some market share?
Sure. So, as last year, we introduced Super App and we started distributing mutual fund. Today, as we speak, we are number 2 in terms of incremental SIP. This quarter, we started distribution of loan product, personal loans, and we were able to disburse around 360 crores of loan disbursement. So that is where we are very bullish. We think that we'll be able to get a decent market share in that space also. By last quarter, we'll start introducing insurance business, but our model is different. It is purely digital model. We don't have a call center and all that. So we'll sell only products which are fully digitized, which has a digital journey.
Right. Sorry, I'm pushing it with timing, but just one more question since we have you and we only chat quarter to quarter. You know, the other thing which we don't know if it'll happen and by when, but I'm told that beta testing has already started is essentially, ASBA for secondary markets as well, right? If that is implemented and depending on when, etc., what are implications then? Will that require another sort of pricing reset to offset the impact?
Currently, it is too early for us to do any assessment. We have to see systems and what kind of there are two kind of an option given to us, 3-in-1 and ASBA. So we have to see that what is the readiness of system, and based on system, which product or which area we have to give options or whether it is mandatory. I think by December, by next quarter, we would be very clear in terms of if there is any impact because of ASBA and all that.
Okay, all right.
But my sense is that that impact would not be very high. So all that kind of very heavy impact things have been announced, was introduced in this quarter.
It's all relative, right? So maybe the impact keeps reducing. The big stuff has been done, and
big stuff has been done. I say that. Yeah.
You provided a clear picture on what implications are and how you're thinking about it. Thank you very much, Mr. Thakkar, for joining us with that perspective. It's always a pleasure speaking with you here. Markets up about 25 points at about 25,000, just under 25,100 right now.
Okay, all right. Let's quickly move on to our next discussion. We're putting the spotlight on the auto sector now. Remember, Bajaj Auto is kicking off the earnings season for the sector today. And the expectations are running really mixed. Two-wheeler volumes have been reporting a pretty healthy rise of almost 13% in the quarter. But we all know that CVs and PVs have been pretty sluggish. Kumar Rakesh, India analyst at BNP Paribas, who tracks the space, is now joining in. Kumar, great to have you on. That's really the question, right? So let's take it, dissect it. And I'm going to start with the weak news first, which is passenger vehicles, right? So what are you expecting for the large players? I think on the SUV side, M&M has still managed to keep the flag flying high. There is Maruti. What's the overall sense on PV and on the passenger vehicle stocks?
Hi, good morning. Thank you for having me on the show. So yeah, for passenger vehicle and the commercial vehicle sectors, this quarter was quite weak, and we would expect that to reflect on the revenue performance as well. The high base and now pent-up demand not being there in the system has obviously started impacting the demand, which has started reflecting in inventory buildup, the discount also going up. And that is a phenomena we are tracking globally as well, not just in India, where the demand has started slowing down in some markets far more dramatically than what it is visible in India. But that's a phenomena which we are seeing in India as well, that for passenger vehicle, at least the demand in the near term seems to be slowing down. But we'll have to keep in mind that we are coming off from a very high base over the last 2-3 years, where there was very strong pent-up demand. So we are going through that adjustment phase in which, given the high base and lack of pent-up demand, we'll see some moderation for a few quarters.
Yeah, I was just coming to that. So you're saying moderation for a few quarters. So basically, we are somewhere in the middle of the slowdown cycle, right? We are nowhere close to the end. Is that for PVs or also CVs? Where are we in terms of the downtrend? And when do you see light at the end of the tunnel?
So for passenger vehicle, we would possibly see another quarter of sluggish growth, and then we would expect by fourth quarter the base should start getting a little more favorable. And going into next financial year, the underlying fundamentals of the sector continues to be quite robust, and we would expect that to start playing out. And hence for the next year, we would expect FY26 volume growth to be better than FY25 volume growth. From CV perspective, the first quarter in this financial year was surprisingly quite strong, but second quarter, given the low infrastructure spending and more importantly, monsoon, we possibly saw much weaker demand in the September quarter. It would be critical to see how the demand is panning out in the immediate next one month or two. If that starts picking up there, we would start believing that there is an upcycle which should be underway and the trough should largely be behind, which is what our base case expectation right now is, that the trough with September quarter is behind us. But we would need evidence of that in the immediate month or two numbers as well.
Okay, all right. So that tells us about the CV and the PV picture and the wait ahead before things start turning around. Let's come to two-wheelers. That's the more exciting space, right? So just tell us how you're expecting the trends to be, and also give us a sense on stocks under your coverage. Which are the ones that you have a buy on, which can still be bought at current valuations? I don't know if Bajaj makes the cut because it's already seen such a huge move, right?
Yeah. So first on the overall sector, that definitely since last year's festival season has seen a very strong demand pullback recovery, and that partly is also helped by a much better financing which is available for two-wheeler customers. And you would see that across OEMs, the financing penetration has increased. And in the recent data which we are tracking, both for the rural as well as urban demand drivers, seems to be really turning more favorable. So there appears to be a holistic, both from financing perspective as well as from demand driver perspective, things turning out to be far more positive for the two-wheeler sector. And the only challenge with the two-wheeler sector would be that from second half of this financial year onwards, the base will start becoming far more tougher. In the first half of this financial year, we have seen close to mid-teen volume growth. We would start seeing a far higher moderation from that high level of volume growth that we have seen in the recent months as we get into the second half. And from there on, we would see a much more normalized growth for the two-wheeler industry going into FY26 onwards.
Okay,
From
so
stock pick perspective.
Yeah, carry on.
From stock pick perspective, Bajaj, we think that should be looked at more from the dividend yield perspective and free cash flow yield, because their payout and more importantly, their free cash flow generation over the last 2-3 years have significantly improved. So when looked at from a PE perspective, it obviously looks like it has dramatically re-rated and there may not be a lot of potential left. But their dividend yield still looks reasonably attractive despite the re-rating, given the higher free cash flow generation and better payout ratios.
All right, Kumar, thank you very much for stopping by and giving us the perspective on the auto space. Appreciate your views. Well, on that note, we have to take a quick break. We'll come back on the other side and get some fresh trading calls going with Mitesh. Welcome back. You're with us in the last leg of Bazaar. Well, we have Mitesh joining in with some trading calls. Mitesh, good to have you back. So there's been some attempt at a recovery. What would the bets be now? Mitesh, I think you're on mute.
Yeah, can you hear me now?
Yes, yes.
Okay. So I think, my understanding is that the markets are contracting, and therefore you will not see follow through on either side. Trading has to be stock specific. The good thing is that the recovery has been led by Bank Nifty when the hourly charts are improving. So if somebody wants to trade the index, my choice between the two would be Bank Nifty. Keep a stop below 51,775 on this spot, which is about 150 points lower. So you might want to buy slowly, buy a bit here now, 50-60 points lower, add more, and keep a stop below 51,770. And I think on the upside, we might get 52,500 plus kind of levels on the Bank Nifty. So that's where the focus will be.
No, absolutely. And, that's basically was the view out there. By the way, Mitesh, BSE, I just want to revisit that, right? 6.5% cut. We just had Dinesh Thakkar of Angel join us in the last conversation. And there are two things. One, there is the Jefferies downgrade, which I referred to in the morning. But on the other hand, there's also, for the first time, a CEO of a broking company is coming in saying that this perceived shift of market share from NSE to BSE because of limitation on number of weekly option contracts, it says ain't happening. Any thoughts technically on BSE now?
So, Prashant, two things. One, I think, we talked about the stock yesterday as well, and we talked about some kind of pullback because while the charts are good, I think, it's extremely overbought. So I think that pullback process has started. Today, the opening was gapped down, obviously, because of this brokerage note. I think this could be a slightly deeper pullback than what I initially anticipated. My initial estimates were around 4,100. So 4,100 to about 40-50 is the first area. But in the worst case scenario, I think even pencil in levels of around 3,770 to 3,800 levels. So I think the stock will be corrected for the next few days. If people still have it, time to take profits here.
Okay. All right. Mitesh got that. Thanks very much for the calls. We'll touch base with you a little later in the day. Let's now shift the focus to the commodity markets. We have Manisha joining in with the latest. Manisha, I wonder if you managed to look away from crude, because that's the one that's grabbing all the global attention, right? What are you tracking right now?
Well, yes, crude oil prices after the 2 days of decline have stabilized a bit. So trying to look at other commodities at this point in time. So I'm looking at metals, and precious metals and industrial metals really seem to be trading in two different directions. I'll talk about precious metals first, where we have seen the gold prices continue to gain. Remember, 2685 is an all-time high, and we're not trading too far away from those kind of levels. And this is even as geopolitical tensions seem to have simmered a bit. We've seen crude oil prices come off because of that, but not gold. Gold continues to hold on the higher side, and we've seen 29% of gains happen in this year itself. And by the way, with those kind of gains, gold is headed for the best annual gain in 14 years. I mean, that's the kind of surge that we've seen in prices. 37 occasions in this year when you have seen all-time highs, yet all-time highs in this year itself. Well, if you look at the markets itself, we are looking at traders putting a probability of 90% for a 25 basis point rate cut in the month of November. Now, that has been factored in. For the gold prices to run further from here, we really need to see some more strength for that matter. Silver also has followed gold, 1% of gains in the overnight market, and silver has gained 32% in this year until now. Also, we are looking at silver prices much off its all-time highs of 49 that we saw in 2011. So more people believe that silver could outperform going forward from here. But then when you come to industrial metals, well, we have seen a bit of a decline in this week until now. Overnight markets were not too strong. There has been a lack of details on China's stimulus. China export numbers have come in on the weaker side. Is the reason we've seen copper prices decline 1.5%, 3-week lows onto that one. Aluminum is trading at off 3-month highs as well. You have nickel prices trading at a 3-week lows right now. Even as individual fundamentals here and there are positive, especially for aluminum, where there is a bauxite shortage coming in from Guinea, and that has led to higher TC numbers as well. But even with that, there is profit taking across both that we have seen. And finally, the kind of data that is coming in this week will tell you on where the prices will move from here. You have US retail sales, industrial production, and jobless claims coming in on this week, and the further cues would come in from this.
Okay, all right, Manisha, thank you very much for that. So that's basically what we are watching out for on commodities. Let's focus on some stocks which are moving, and what else but BSE. Vamakshi is here. Vamakshi, take it away.
Well, absolutely. BSE is reeling under pressure today after a note that has come in from Jefferies. They've gone ahead and downgraded their rating on this counter to underperform, but they've raised their target price to 3,500 per share. They say that the stock has run up over 100% post-release of SEBI's new F&O framework, and this run-up largely came on the back of expectations of market share gains for BSE at the cost of NSE. Now, they're assuming a 25% hit to overall market volumes. BSE's valuation based on this is pegged at a PE of almost 40 times FY26 estimates. This in turn implies, the market share rising from 13% in the second quarter to 30 to 35%, with nearly 40 to 50% share in weekly contracts. In Jefferies' opinions, this appears to be quite stretched. They also fail to they also say that this fails to capture risks from higher impact on overall market, low spillover gains, as well as further regulations. They say that they see near-term risk reward as unfavorable, and given those factors, they've gone ahead and downgraded their rating to underperform on BSE.
All right, Vamakshi, thank you very much for that. So that is, of course, what's happening on BSE. Stock is under pressure. We'll take a quick break here. My colleague Lata will get chatting with Nidhu Saxena of Bank of Maharashtra, and they talk about the second quarter earnings coming in from the bank. Stay with us. That's coming up.
Welcome back. We are sticking with results. Bank of Maharashtra has reported practically eye-popping results, actually yet again. And this at a time when banks are fighting for deposits. This bank has reported a marginal rise in their net interest margins to nearly 4%. Accompanied, of course, by impeccable asset quality and good fee income growth, the bank has reported an all-time high return on assets of 1.74%. Joining me now is Mr. Nidhu Saxena, Managing Director, CEO of Bank of Maharashtra. Good morning, Mr. Saxena. Congratulations, great set of numbers. Thank you very much for sparing time for us this morning. Let me first start with the margins. How did you manage to improve margins when the world is fighting with higher cost of funds?
Right. I think rightly the question is quite appropriate. And if we look at the leading brokerages also talking about that, probably the cost of deposits have gone up in the system, and it will impact 2 to 5 basis points on the NIMs, which may see a reduction. But if you look at my profile of business, my cost of deposits have gone up by 37 basis points, but cost of funds have actually gone up only 27 bips. And this is through, we have exercised options of refinance through SIDBI Mudra wherever eligible. We have also seen a good traction in our CASA deposits. So if you see deposit in the overall has grown YOY by 15%, within which CASA has grown by 12%. And above all, to top this is that my yield on advances have actually improved to 9.21 levels. So all these have sustained that I have not been able, I have been able to actually do a NIM which is not lower than what we have done in the last 2 quarters. In fact, 1 bips we have actually improved on a YOY basis. 9 bips improvement in the NIM is there, what we have showcased. Having said that, I'm also mindful that whenever the rate cuts do happen, I have a loan book of 37% which is linked to repo. So that will see an immediate repricing, and the corresponding deposits will reprice with some lag, as we all know about that. So I'm keeping a conservative margin guidance for me of 3.75 to 3.90 in terms of NIM to be maintained. And although I've been performing much above this guidance in the last 3 quarters, I don't see much of challenge. But with this event likely to happen, I want to remain conservative going ahead.
Okay. Well, I don't know, the event-wise, the rate cut, if anything, is getting pushed by the Reserve Bank after we looked at the last inflation number. But that's another discussion altogether. Let me just dwell on what you spoke in terms of cost of deposits and yield on advances. Your cost of deposits, I'm looking at page 17 and 18 of your investor presentation. Cost of deposits has gone up by about 20 basis points, and yield on advances has gone up by 25 basis points. Okay, I'm only looking at advances and deposits. Now, that can be a bit of a worry, isn't it? Yield on advances going up so much. Where are you lending? One hopes it is not risky lending.
Yeah. In fact, we are very, very quality conscious. Whatever loan book that is getting created, first of all, if you look at my RAM corporate share, currently I am 62-38. So I'm in that space where the margins are higher. Not that corporate we are averse to do. We will definitely not like to miss out on any emerging opportunities in any of the sectors or segments going forward or even now. So currently that high RAM share is sustaining this higher NIM. Also, we are conscious, if you look at my exposure in the AAA category, I've actually reduced my exposure in AAA category, where I have gone below A and above. It is not that I have done any lending in a segment which is not an investment grade. We have just moved away from a space where the margins to earn or nothing is left on table for the banks.
I agree.
And we have, in fact, in the segments of MSME, BBB and above, where we are having sole arrangements, we are also planning, and we are actually turnaround time in conveying decisions from the bank has been expedited. And I am able to charge a premium to this through my efficient working, and customers are happy to pay that. So that's how we are seeing that whatever segment we are entering and taking exposures, quality is the first and foremost requirement for me. Beyond that, maybe if we can earn better margins through negotiations, through my better delivery, I'll do that.
Okay. No, I actually was coming to exactly that point, and now I'm looking at page 23 of your investor presentation, where you have given us the rating bond-wise, percentage investments. Your AAA investments have gone down from 8% of your outstandings to, from your 6% of your outstandings to 4% of outstandings, whereas the exposure to AA has gone up from 31 to 34, exposure to A has gone up from 23 to 24, exposure to BBB remains steady at 14, but it has gone up year on year from 11 to 14. Are you sure? Because BBB, when you go, there would be a little of a worry. Are you sure that you will be able to maintain this asset quality?
So, as I said, the data that you just shared proves the point and doesn't require me to say anything more. But we are building a loan book and we are very conscious about the quality. And even in the RAM segment, I am actually not underwriting below a certain benchmark. I am even contemplating to improve the benchmark. Today, I am growing at a very fast rate, which is high double digits of 22 plus. And I don't mind shedding off 1 or 2% here there.
Got it.
Still, I'll be growing the fastest in the industry. So, but I'm completely quality conscious. But yes, we want to do a business. We want to be present where something remains to the bank on the table. We should have some earnings also. Top line alone is not sufficient for me.
No, I agree with you. Actually, your slippages are up 2%. So, I mean, I'm not. There are no doubts on your quality as of now. I was just looking at the bond exposures. Now, if your quality is so steady and good and net NPA is down to 0.2%, why are you providing? Why this 825 crores? And last quarter, it was another 900 crores. Where is this 1700 crores just going into contingencies? Is it floating provisions?
So, see, to maintain that NNPA of 0.2%, today, whatever slippages I encounter, slippages are bound to happen. So, beyond the IRAC norms, I am providing completely 100% for the fresh slippages also, just to maintain that 0.2 to 0.25 range of guidance that I have kept for NNPA. So, it is that kind of provisioning that we are doing. And yes, couple of things, we are having accelerated provisions for ECL, and which time to time I'm actually already started build up on those fronts to provide whenever the guidelines are going to come. I would have done something already in the balance sheet to cover that requirement.
Okay. Actually, how long do you have these tax advantages? I mean, you're paying peanuts as taxes, 53 crore because of your netting off the DTA. How long do you pay such low taxes?
So that advantage is going to be there definitely for this FY. And I would say in the next FY also, 25-26, for the half of the financial year, I will continue to get this advantage of setting off against accumulated losses.
Okay, that's excellent. Well, I'm running out of time. I have to push this question in. You know, at 1.74, your ROA is comparable to some of the best private sector banks. It's a very good set of numbers. Would you consider rebranding your bank? Now you have got QIP money also. I mean, call it Maha Bank, but I don't know what. Just to appeal to the next Gen Z. Are you planning any rebranding? You know, like Ratnakar Bank became RBL. Are you planning something like that?
Right. So, yes, I think not very consciously, we have not gone to board to do, but if you granularly see a lot of activities that we have done around our products, around our as basics as the account essentials. Today, I have a rebranded, debit card. I have a rebranded passbook. We have adopted metal card for our premium customers, premium branches where we are supplying those kind of materials. So we can always look at this option. I want to be present to the sectors, the segments where the growth is happening. And definitely we would not like to miss on the young segment, which holds a lot of promise for future as well. And to address them, I need to upgrade on my technology. I am working on revamping my entire mobile banking app, and that new lifestyle option will be available to me by end of this December. So a lot of rebranding through that is going to happen. And we did celebrate our 90 years of foundation last month. Yeah. And we have done a lot of activities around what is the aspiration, because so far we have been, the good part is we have been performing on a very consistent scale for last 13 to 15 quarters. And this quarter particularly has been also exceptionally good, I should say. But I have my own aspirations because as of now, we've been operating on a smaller scale. So we want to become a bank of greater significance. We have our aspirations to go in the PSB space, say 1 or 2 notches in the next 2 to 3 years. And to do that, a lot of initiatives we are taking around products, processes, use of technology to reach out to clients and so on.
Now, I will want another chat with you out of time today because it's result season. We will want a more relaxed chat on all these issues. You know, Bob went to Bob World and SBI went to Yono. So perhaps some rebranding is on the cards for you as well. All those questions for a later time. Many congratulations for these results. And thank you very much for joining us. We have to wrap up on Bazaar. On that note, Chartbusters come.